Originally, the plan for this video was to go over programs that lenders can offer you in order to buy your home. However, if I said words such as conventional, government-backed, VA, FHA, USDA, 15-year fixed, 30-year fixed, or even a 5-in-1 ARM, or even the word ARM, what comes to mind? Do you know the definition of them? Do you understand what it's saying? I don't want to make the assumption, so in this episode we will be going over terminology for programs that's going to affect you whenever you buy a house. This is Brian Mason, your Northern Virginia Realtor. It is story time. This story is not meant to entertain you or to put you to sleep. The purpose of this story is to help you comprehend the terminology associated with mortgage loans. Now, let's talk about little Johnny. It's 1942. Little Johnny is walking home. He sees this amazing house for $100,000. Little Johnny wants to buy it. Little Johnny goes to the local bank and speaks to the lender. The lender states, "Little Johnny, all your paperwork is good. Congratulations. We will give you a loan. All you have to do is provide us with $20,000 and we will finance the $80,000 so you can buy this home." This $20,000 is 20% of the loan. This is commonly associated with conventional loans. Conventional loans are loans that are not backed by the government. This is where a lot of home buyers will believe that they need 20% to buy a home. Well, as you can imagine, little Johnny is sad and he goes home to his apartment. He is drafted into the military and fights in Europe during World War II. Little Johnny returns in 1945 from his deployment to his apartment because he was not able to save up that $20,000 to buy a home. Well, the government created a program for those service members who meet certain qualifications. This became known as a VA loan, which allowed little Johnny to buy a home at 0% down and finance a whole $100,000. This type of loan is known as a government-backed loan, which also includes loans from the Federal Housing Administration, FHA, and the United States Department of Agriculture, USDA. Essentially, the government agency will give the bank the money lost from the sale of a home after it has been foreclosed if the service member or the person who is backed is delinquent. Now, it is 2008 and little Johnny wants to buy these homes that need to be renovated so he can sell for a profit. A VA loan will not work because little Johnny is not planning on living in the home and all the banks are not interested in assisting little Johnny with a conventional loan. Little Johnny meets Susan, who likes to invest her money. She tells little Johnny that she will provide a hard money loan so he can do his project and renovate the house to sell for a profit. A hard money loan is usually provided by a company or an individual that is backed by real property. The terms are usually shorter and the interest rates are typically higher. This is due to the associated risk with these loans. This type of loan is also known as a non-conventional loan. He receives the money, flips the house, pays back the money, and keeps the profit. This is the story of little Johnny. Now, discussing loans. There is always a question about rates. We will talk about 3 types of rates: fixed, adjustable mortgage rates, also known as ARMs, and balloon. A 15-year fixed rate means that your interest rate will be the same for the next 15 years. And as you can guess, a 30-year fixed rate means that interest rates will be the same for the next 30 years for your rate. So it's the same as day one up to the last day of your 30-year loan. An ARM such as a 5-in-1 ARM means that the interest rate will be the same for the next 5 years and annually increase thereafter, or decrease based on the current market rate. Now, a balloon loan means that at the end of the term, you must pay back the outstanding balance. So if you do a 7-year balloon mortgage, after 7 years, you will have to pay back the rest of the balance. However, this is usually completed by refinancing the home. Hopefully, this helps you understand the terminology associated with mortgage loans. Until next time, until the next video, Brian Mason, out.